James McCallum, CEO and Chairman of Xergy Group and Professor of Energy at Strathclyde University. Welcome back, James.
Thank you, Sean.
Happy New Year from the Daily Energy Markets podcast to you. We've seen in recent days, James, the earnings results from the oil industry, the Shell most pronounced, it's still talking about possibly moving its listing to the US was one of the headlines that came out of its earnings, where it failed to reach target but maintained dividend commitments. And then we saw Baker Hughes surprise on the upside. Your thoughts, firstly, on the health of where the oil industry, the energy industry, and it's, it bet big on the horse that is Donald Trump. Have they got what they bet for?
Look, the long and the short is you certainly with Donald Trump, you've got what you bet for. I think Gaurav sort of summed it up very accurately there. You get a president whose words are, laced with contradiction, and you take the version of the words that you want to associate with. The reality is that there is little change in terms of the super major oil prices as our share prices as a general rule. Shell's move is to try to close the gap between themselves listed on a European London Stock Exchange and where their competitors are getting their share price elevation from in New York. So it's not about what Shell does, it's about how you effectively get more comparable with Chevron, Exxon, Occidental. If you look at the oilfield services, there's a nice story on the News Digest this morning around Baker Hughes's earnings report, which could lead you to believe, oilfield services is up. But if you read a little deeper, you'll see that that's not the case. The oilfield services division within Baker Hughes actually lost money in the last year. It's gas technology particularly around the refining technology, compressors, turbines, etc., that's driven Baker Hughes's share price. So all the oilfield services are down. Baker Hughes Rig Index is down. Oil companies, as a general rule, are down, which just simply tells you that nobody is buying into this drill, baby, drill story being a good outcome for the oil and gas companies. And when it all comes down to it, I made this point last year repeatedly, Sean, at these kind of prices, there isn't the upside in the Permian Basin. And so any activity that's going on in the US just now is all around gas. It's not around oil.
And I would imagine, James, it's also around maintaining production capacity given the decline rates in the shale patch.
It is. I mean, the Permian Basin has for the last 2-3 years always been around recompletions, and I guess if you want an entertainment show to kind of tell you how all of that's playing out, there's a wonderful show come on air on Netflix just now called Landman. And for the drillers in the room, a landman is a person that finds the licenses that you then go on to drill on, or indeed to work over rigs. It gives you a great context of the American and the Permian oil and gas scene from an entertainment standpoint. So I encourage people to go watch it. It is incredibly close to the reality in terms of what's actually going on and how the US producers, particularly the independents, have had to respond to the prices that the market is showing now, and certainly for the foreseeable future.
In some regards, it seems the new demand center that is going to be the competitive place this year is Africa. Africa's day is kind of come. We've got the opening of the Dangote refinery now, massive new refinery into supplying products into Africa, where most others have been, and particularly the Middle Eastern new refineries have been looking to compete in Africa. Your thoughts where Africa can go? Is another false dawn for Africa, or is this one, do you think, going to be potentially deliver more than in the past?
I mean, look, Africa remains the global sleeping giant. If it could get its act together, then anything is possible in Africa. But it's a long term play. I mean, in some ways, it plays into something had a little conversation just before we came on air, Sean. For me, the two things that are playing out in the conversation we've had so far today is it's a stability issue for OPEC. How do I maintain stability? How do I maintain stability against a backdrop of supply of crude is not the issue. Demand is the issue. And then you've got Trump, who's on the other side, and whether I agree with Trump or otherwise, he is simply sending a message to the rest of the world, which is take responsibility for your own economy, for your own actions, for your own strategy, and including energy strategy, because I'm taking entire responsibility for planet US. And I think for me, in some ways, I welcome that, Sean, because, obviously as a European, Europe has tagged along on the shirt tails of the United States, for almost most of my life. And the reality is, and that has led to a failed European experiment. It has led to the United Kingdom leaving in Brexit. But there is very, very little cohesive strategy around where we go. And that is what will impact demand. So the reality is if you look at China, China's definitely taking responsibility for its own actions. Gaurav has quite eloquently sort of like pointed out that in the last decade, India very, very, very carefully taking responsibility for its actions. Europe lost, the United States under Trump coming back very strongly, and Africa, the unknown commodity, the absolute unknown commodity. So it's great to see investment going into Africa, but it's very early stage.
James, my thoughts, I wanted to get your insights. Europe, are we, this sort of crazy Trump show that's the second coming, and everybody's, focused on it, obviously, because it just is the usual kind of shenanigans. But ultimately, the real story is Angela Merkel coming out from the darkness and the silence to make very strong comments about her successors in Germany doing a deal with the far right, and where are other real issues going in terms of Europe's future, that these are really the focus areas that we need to be paying attention to. Where do you think Europe is now at the beginning of this year, and its vulnerabilities and relativity to sort of stability of growth and energy demand and such things?
So a lot of questions in there, Sean.
Yeah.
So the reality is, if you take Europe and the US,
I mean, ultimately, the question is we need to keep our focus away from Trump, because despite all the noise, there's predictability, but the real news might be elsewhere.
Yeah, look. Trump is doing what Trump does. He's very candid about the fact that he's a businessman. He's very outspoken about the fact he's going to bring a business focus. And what he is doing right now is he is throwing stuff out there and throwing it at the wall and waiting to see what will stick. It's a negotiating tactic. What kind of opportunities will exist for me if I throw a big idea out there and I watch what happens?
If you say he's a businessman, right, and then he ultimately has a bottom line, and you know that because you're a very successful entrepreneur and had very good bottom lines. What is his bottom line? Is it the S&P 500 that has to keep shining? And so every decision he ultimately makes is not going to jeopardize that? I mean, it seems, what is his bottom line in order for us to have some sense of North Star? Because I think his bottom line is somewhere around there, and he's not going to do any of this stuff that's going to jeopardize that.
Look, yeah. So look, it's amazing some of the stuff that he puts out there, and that people don't go, oh, hang on a second, wait a minute. And the classic is I'm going to make America great again. America. If you take a look, you just made the point. The American stock markets are at an all-time high. America is not in the toilet at all in terms of where it's actually at. So the reality is he is tweaking at the edges. He has a 4-year term. He wants to go into the history books. As a business person, I think he genuinely wants to come off the back of 4 years where he maintains the growth within the United States. And in maintaining it, he will take responsibility for it. Look at what I did. And the point you're making is that inherently within the markets at the present moment in time, it would seem that he only just has to sit on the horse and it'll take him there, without doing anything too radical. Europe's in a very different position. Europe is in a place where growth has stagnated, particularly in the UK, Germany, France, the big economies of Europe. It is flat at best. And the issue that you were asking about, so where's Angela Merkel going? Where's the move to the right going? It's all around how people feel the pain of what's going on in Europe just now in their pockets. The price of energy, access to the price of electricity, a real bugbear for the politicians in Europe. And that is what is actually happening. We've seen in the last week, United States pausing on interest rate cuts, Europe pressing ahead and making it very clear that Lagarde sees several other interest rates coming through over the course of the rest of 2025. So these two economies are going in almost opposite directions at the present moment in time, and there is no clear leadership within Europe as to how that changes. If I may, Sean, I'd just like to come back on a couple of points which you made about artificial intelligence and the point which Gaurav made. So the answer to your question as to why did oil prices drop was because a big part of the story was that there was less energy consumption required for this new form of artificial intelligence. And with less energy required, clearly that has an impact on all forms of energy. It had an even bigger impact on nuclear stocks if you took a look at it, because it sort of like pushed against this view that we're going to have new nuclear plants everywhere to power AI. Now, picking up on Gaurav's point, the reality is I think we're going to end up with two kinds of AI. We are definitely going to end up with open AI, which was the bit that pushed against the AI stocks and said, look, there's going to be an alternative in terms of the choices that are available to you as this market unfolds. But when it came down to it, the approach that the Chinese technology actually takes is somebody sat back and went, do you know what? I'm not entirely sure we need to actually calculate things to 20 decimal points here. I actually think we could actually get away with an 80-20 solution here that actually takes it to 4 decimal points. That's more than enough. It uses a fraction of the energy to do that, and it gives you an answer that enables you to progress and move forward. Artificial intelligence is all about, or the application of it is all about a business, a process becoming the best version of itself that it can be. And what happened last week was we suddenly opened a window on the fact that we are not limited to one geo market in terms of its provision. We're going to have a wider supply in that particular space. That's a good thing. It's a good thing that we'll end up with two different systems. Governments will undoubtedly use the sort of 20-point decimal place accuracy because they need to have that, which is Gaurav's point. Markets, businesses, companies, small companies in particular, will be more than happy with the 80-20 solution. So it's a very positive thing.